Good afternoon, everyone. Marty Mazzari here, June 4th, 2019. After today's really big rally, I thought I should just pop in on you for a few minutes and update my narrative on the chart. Now, this is a different chart than the one this morning. This is a live chart that's going every day during the cash session and on futures afterwards too. But this is just the S&P index itself and how it traded today. Earlier this morning, if you watched the video, I was pointing to a bit of a surge at the open. We got more than twice where the market opened, so it was a nice gap higher and then some real follow through, particularly later in the day. This big green candle right here is today's move. It's not with an engulfing candle, but it's very positive. And lo and behold, the index closed back above its 200-day moving average, which it gave up the last couple of days. That's a good technical sign as well. You notice I have a trend line drawn right here. I see that as potentially the next level of stiff resistance if we get some momentum and more short covering right here above 2,800, which is an area that I've been talking to you about. I can virtually guarantee you there are some folks just aching to sell this right up here against this resistance, and if they're short and the market moves up away from them with momentum, they're going to have to cover those shorts, and that means buy stocks and then exacerbate the upside. There was a ton of short covering in here. Some shorts got trapped big time right in here, and they had to cover, and that's why we got this big rally here today. It sure makes sense to me that 2,800 poses some resistance. But again, the fact that we closed above it, 2,803, is very impressive. And the way we got there with that momentum at the end was very bullish as well. So it makes some sense to see some follow through in the morning. If we get some bad news overnight, of course, all bets are off, and we could easily gap down and resume our downward trend here. Now, today's rally, we had another element jump in there. And I should have mentioned that to you because I knew that 13 Fed governors were speaking this week. But yesterday was Fed Governor Bullard. Today was the chairman himself, Mr. Powell, who basically just said, you know, if the economy needs help, we're going to be there to help out. Of course, that's something the Fed would always say. But in this environment where conditions are beginning to wane, the Fed suggesting that they would indeed be willing to cut interest rates is a very bullish near-term event. That's definitely going to pull some money in, and it's going to have some shorts covering. Now, clients out there, those of you who have brought in new money over the last few weeks, you know I've been stubborn during this downtrend. Originally, I thought, you know, we get to 2,800, I'll start dribbling a little in. For the most part, other than just a few spots here and there, I really haven't done that because I didn't like the complexion of the market here. And sure enough, we had a nice move lower. Well, now we're right back there above 2,800, and it has me thinking again. If indeed we go through here with good volume and good momentum, I may want to start not going all in, but dribbling in a little bit just in case this is the kind of momentum that also helps better decisions around trade and so forth. It could be the beginning of something more substantial. Odds are that it isn't. Odds are that right now we find some resistance up here, we come back down, we bounce a little bit around 2,800, and then we continue to find our way down here to lower lows. I pointed to, you know, Fibonacci retracements earlier. I think this 2,700 could be an important level. 2,650 would be a 50% retracement of this big rally that we've had right here. It's very common to get that kind of a retracement. It happens all the time. That could be very serious support for the market. Again, and I'll say it for the umpteenth time, to get to where we'd like to be, and that is back in expansion mode, back in bull market mode, we've got to have something else to talk about other than trade wars and tariffs going forward. So that would be what cooler heads would suggest. That would be the smartest move for the powers that be. So I suspect that's where we'll end up. In the meantime, as conditions begin to wane, that was confirmed today by the Fed's dovish tilt, we do have some things to be concerned about, and we do have to be on the lookout for a breakdown in general conditions. Right now, things are still okay. I keep repeating that. They're not as okay as they were even back here. So we're very sensitive to the data, and we're keeping a very close eye on it. We're not ready to start getting defensive in client portfolios yet. Again, odds still favor more upside and a nice bounce. I think they do favor from lower lows. But my goodness, we absolutely could come through here with some momentum and see stocks rally much higher, because I do think there's definitely still enough pessimism in the market and enough shorts in here that would have to cover and send this market higher. Whether or not it's sustainable really depends on policy going forward. I'll leave it there for now. Thank you, as always, for watching and listening. And of course, I'll be back soon. Take care.